believe it or not, our recording feature has come back up. Oh, that's good. Okay, we've got lots of suggestions what to do. Okay, so you should be able to see my PowerPoint now. There's obviously some real problems with Glennis and Daryl's equipment. Apart from anything else, while they were connected, we were unable to use the recording facility. We have it now, and I'm recording it. Let's move on. So basically, that was the message that Glennis got, and then when Daryl told me about it, I went to test it, and that gives me an opportunity today to share with you some of the stuff that we do. Let's have a look here so you can see what screen we're up to. I've lost the plot a bit here with that talking. Let's see. Here we are. Okay. You can see my screen on some sort or the other. Okay, we'll move this along, folks. I'm sorry about this. It's all a little bit disorganized. I'm just putting up the compliance page now for you to see. The stuff I'm going to show you in the next 10 minutes or so is hypothetical. It's what's generated by our computer programs, most of which have been written for us by Trade Navigator. I draw your attention to the comments about hypothetical performance at the bottom. These computer programs make many assumptions, one of which is that there's always liquidity, that you get filled at your target price, and a few other assumptions as well. So bear that in mind as we move through. So here's Palladium. It's a pretty dramatic market, as you can see. I love that. It had a big blow-off spike back in early 2000, then massive ongoing corrections for 8 or 9 years from the look of it, and then it's starting to rally back up. It had a margin of 3,250. It's one of the semi-precious metals, and it's kind of interesting to take Sister Sage's thoughts and analyze them. And I want to show you the mathematical basis of what we do with these Fractal studies. So don't get yourself too tight in a knot about all of the mathematics in here. I just want to give you a brief overview. You can look up here. You start off, the first thing we do is we test it. We have an infinite variety of fractals that we can use. That's why it's called Fractal. Fractals are fractions of various previous operating ranges. And we can take that operating range however we have defined it, and we can split it up into fractions, which we call fractals. And we can go anywhere from 1/2 to 1/100th if you want to, from a practical point of view. Once you get much past 1/16th or so, you start to get the thing moving so fast that you can trade it with an auto trade, but it's getting overrun by very, very small net returns. So anyway, we start with the slowest speed available to us, and this is the testing of Fractal on PA067. We use the 067, a bit different, the 057. The 067 is a continuous contract that adjusts on a theoretical basis for contract rollovers. It's not real. It assumes, it sort of creates fill-in bars, but for continuous testing, it's the one you use, and it smooths out those big gaps that you get on the rollovers on the 057. So first thing I did was to start and test this on the slowest speed available. This is a 6-month out of sample test. We never do a test that includes the current month's trading. We pick a 6-month period, or a year, or 2 years. For Fractal, we don't. We have 1 year and 2 year results. We don't really go much past 6 months on the testing because these markets move around quite dramatically. As an example, coffee this year has been absolutely fantastic on Fractal. I don't think we've released it as a to the public to trade, but it's just been absolutely enormous. It's made something of the order of 40,000 in the first 7 months of the year. But prior to December 2013, it didn't make a profit on FracZen at all for the previous 15 months. So that's how much these markets move around. And don't forget, with FracZen, we're looking at a micro view of these markets. So this is an idea of what we do. So we start off by taking the slowest fractal, and we test it, and we say, well, over 6 months it's only made $200. That didn't even pay for the electricity. I don't know what Sage is smoking, and as far as I know, Sage doesn't have any vices. She's a very clean living, very health conscious person who lives pretty much on one almond and a bit of soybean milk, as far as I can gather. But anyway, that's what we saw. So we then moved on. Your page should change in a moment. That was the slowest fractal we had. We now move on to the fast fractal. And we go to the other end of the range, and we find that we've had 291 trades in a 6-month period. Well, there's not that many days in that period. There's about 254 trading days in a year after you take away weekends and public holidays. So let's say 127 trading days in a half year. So you've had more than 2 trades a day. Well, that's far too many, far too fast. So we're getting even more worried about Sage at this stage. But then we start to optimize the fractal, and we do that with a series of mathematical runs that gradually move towards the optimized picture of the fractal in the period that we're testing. Now, as you'll see as we go through, the period that we're testing has limited forecasting ability for the future. That's why they say past performance is not necessarily indicative of future performance. This is now we've got to the stage we've optimized the fractal on Palladium, and we found a speed at which this market is comfortable, or at least the speed at which it was comfortable during the 6-month testing that this covers. We've got the number of trades down now. We're down to 32 trades over that period. So we're talking about 5. Here's this number here, total trades. We're talking a bit over 5 trades a month. That's about where we want to see it. We've got a good number for our average trade of 605, and we've got a total net profit for the 6-month period of 19-odd thousand, and that's pretty good. Now, let me show you this down the bottom. Some of this data down the bottom is quite interesting. Other is something you won't use all the time. But this number in particular down here, I'm very interested in for reasons I'm going to tell you about later. And this is the average, the peak in a loss. But this is the most important one here, the average run-up in loss. That's a very interesting number because it tells us on average how far the losing trades went before they failed. And if you were aware of that number for all markets, I suggest that would be a point that you'd think very seriously about tightening up your stops, or at least moving them to break even. So that's a very interesting number right there. So after we've got the optimized the speed of what we're doing, we then go on and we ask the program to tell us what's the best stop loss to use. And you can see down this left-hand column here, test number, there are 11 tests that I've used, and they're testing numbers 1 to 10 as a stop loss. Now, they're not actually stop losses, so they're simply computer code, and they have a matching meaning, but it just runs 1 to 11 because it's easier for me to see it that way. And you can see that the stop loss you use on these trades is quite dramatic. And these are organized from the best trade up here, the net profit of 20,000, which is actually a gross profit because this is not at the moment set up to debit brokerage or allow for slippage, etc. And as we go down through these various test runs, we finish up at 12,000. So we've lost 70% of our profit by not having the optimum stop. And what this tells us here is that this number -3, whatever that equates to in the code, is the best stop loss. And if you use the stop loss that -3 refers to, that will give you the best results. So we've now got a pretty good idea of the best fractal to use, and we've now optimized the stop loss. We now go on to ask it a few other questions, and a lot of this stuff testing is coming out of the new Fractal Pro program that we're still actively testing and hoping to release to you in maybe a month or so. Excuse me. And it gives some pretty interesting answers here. And what I've shown you just to fit it on the sheet is just a selection of trading results there. In fact, this run ran 699 times of 1,400 on this sheet, and I've just picked out a sample to show you. And it tells you the various combinations of using a fixed stop, using a dollar target, and then using a different stop, a trailing stop when you get to that period, and it has lots of other code in it. But you can see that this particular combination up the top here, which is Fractal Pro combinations, gives us a 62.5% win rate and net profit of 24,000. So we're starting to think fondly and kindly of Sister Sage now, and thinking that she's got a pretty good idea from her conversation with Daniel. It's really been very worthwhile. So we can now run these same figures again. We're getting closer to where we wanted to be. We think this is a pretty reasonable setup. There's nothing absolute about this stuff. There's no absolute number one silver bullet, because you're testing an out-of-sample 6-month period, which it may or may not have some forecasting ability for what's going to happen for the next 30 days. But what we have learnt so much about Fractal in the 8 or 9 months now that we've been running it is that these markets change their speeds very, very dramatically. And we haven't had the facility until now to change the speeds that we're running. All these markets that have been available under the Fractal text program, the one where you get the text on your telephone, we call that Fractal.text. And some of the stuff I'm showing you now, which will be coming out in a month or so, is Fractal.pro. Excuse me, and the Pro program will actually run on your own Trade Navigator program. But here's the summary now that we've got a stop in place, and this average run up in loss is now $575. So I'm very interested in that. But over 6 months here, we've got $22,700 from 32 trades, and we've got you notice we're not in the market terribly much. We're only in the market 53% of the time, and we've got a winning percentage over here of 59%, which is extraordinary. These Fractal numbers usually have a percentage in the high 40s if they're good or lower. It's not a program that's optimized for winning percent. We can optimize it for winning percent if anyone wants to do that, but I optimize it for the most dollars, assuming that you're going to cope with the emotional ups and downs and slings and arrows of outrageous fortune. But really our job as traders, as you know, is to make money. Our job is not to be right, it's to make money, and that's why we optimize these programs for dollar value. But that winning percent is quite extraordinary. So now we're thinking very fondly of Sage and believing that she's got this message from Daniel exactly as she said she did, and we love that. So your screen's about to change, and what we do now that we've now done 3,800 data runs, we can ask the program to spit us out the results for the last 30 days, which it's done. And you can see that for this number 5 choice here, this is the one we selected. This is what told us our most reliable Fractal settings were. And in the last 30 days, it's returned $3,035. And it's had a winning percentage in here of, where's our win percent? We've had 50%. We had 6 trades, 3 winners. Now, as you'll notice, it's by no means the best number that returned. This is the best number here, $7,000 odd from choice number 7, followed by almost $7,000 from choice number 13. But all of our work on the out-of-sample data suggested that this was going to be the best play on these settings, which you can see. And what it has done, it's returned almost exactly the average. So this is the choice that we made, and it's returned $3,000 odd. So you look at this and you immediately think, well, how do we get to the optimum? How do we get to the $7,000 return? Excuse me, or the $6,000 return? And the answer is you can't, because that's the future. And we are not able to forecast the future. We can get very, very good ideas about where markets are going and what they're likely to do when they get there, but we do not have any knowledge of the future. So how these things work is we take the past performance and we optimize to find the best and most reliable settings, and our aim always is to return the average return or better, and we've done that there. So this is that gives you an idea of the work that goes into setting up these Fractal markets for you. And incidentally, we're about to release not only Palladium but a large number of additional markets as well in the .text Fractal program. And I'm showing you now, for those of you who haven't seen it, this is excuse me, from a previous webinar, and it just gives you a picture of what you'll actually see if you decide to get involved in the Fractal program. We send the signal directly to your cell phone, and this is what it looks like. We've got 4 different signals in here. You would get them one at a time, and this is what comes up. It'll tell you you get a beep on your cell phone. It'll tell you the market. It'll tell you to buy or sell, which you should always do as soon as you possibly can. And it tells you what the initial stop loss is. So we've got all that there. Let me just tell you, if you're interested in any of our stuff, you're very welcome to have a free trial. We don't do any sales or marketing. We simply say the products are there. We try to inform you what they are and invite you to take a free trial of anything that you want. And to do that, you simply go to the Danielcode website, which I'm going to show you in a moment. Click on the banner on the front page, hit the register button, follow the prompts, and you will be switched on for everything all at once. I think Terry's got the settings now that doesn't matter really what you ask for. He'll switch you on for everything, or the machine will. If you are going to take excuse me, a free trial of Fractal, I do urge you not to take too many markets. We have a lot of people who say, oh yes, I'd like to have a trial of Fractal and give me everything. So, you know, you get 9 Forex markets and 11 futures markets, and it's really far too much for those of you who are thinking you're going to trade this stuff manually, and they get completely overwhelmed, and I think don't get the benefit of the trial. So if you're going to get involved in the trial of Fractal, pick 3 or 4 markets and concentrate on those, because you literally won't be able to keep up with everything else that is going on. There's just too much data there. Of course, once you get Fractal Pro, once we get that available for you, you can trade as many markets as you like, and all of them if you like. I wanted to move on now, just before we go to Daryl, and show you something that is pretty interesting. And what this is the Danielcode website, incidentally. For those of you who want a free trial, it's this button up here. It says Danielcode free trial, and it's on every page. So all you have to do is click on that, follow the prompts, and you'll get a free trial. This is the fourth seal. This is our forecasting service, which I run in conjunction with Frank DB, who's one of our star students and a bit of an expert. He's taken a particular interest in the fourth seal, and if you're not subscribed to it, there's a lot of drama going on, and no more drama than what's going on in the S&P market. So I'll give you a few moments to read through that. We cover about, I think, 9 or 10 markets with the fourth seal, and the main point about them, which is lost on many people, is that they are forecasting market turns, which I'll talk about more. I've had a couple of questions about that I'll come to. They are forecasting market turns, but much more than that, they're also forecasting present trend and when it is likely to end. And if you balance your trades in the direction of the fourth seal trend, in other words, if you take slightly more positions, maybe 20-30% more on the direction of the fourth seal trend, and slightly less when you're trading against the fourth seal trend, you'll find that you'll probably go close to doubling your equity returns. It's a very, very powerful tool, and I don't think all of you are aware of that. It's not something you just sit there and wait for the turn. Until the turn comes, you're getting a very strong and very different form of trend indicator that is not available anywhere else. So I really do recommend that for you. So I wanted to show you that, folks. As you can see, there's a whole lot of drama ahead, according to Frank, on our fourth seal. These are the markets we cover if you're interested: DAX, S&P crude, natural gas, copper, T-bonds, DX, which is the US dollar index, and gold. And I don't know, you really need to have the fourth seal for your trading. If those of you who haven't seen it, I suggest you try it, and particularly that you try using it as a trend indicator, and biasing your trades a bit in that direction. It's very, very powerful. So having read all of the drama that we think is facing us, I now want to take you to the charts and just bring you up to date what's happening with equities, because they may well be at a very crucial point. This is our 12-day chart. You can see that a month ago or so, maybe longer, July, I wrote the article called S&P and a Cocked Hat. And basically what that was saying was that the various fourth seal lines had converged and got to the stage that they were presenting combined levels of resistance to the market right here. And we had a time cycle expiring there, and we thought that made a turn imminent. That's the 12-day chart. Let me take you to the get rid of this tool, which is the spotlight. Go back here and let me show you the major chart. This is the 24-day chart, in which every one of these, each of these bars, is created from 24 days of market action. And this was the basis for that article, S&P and a Cocked Hat. You can see it was written here, and the market went straight up into the conjunction of the two red lines, which are fourth seal forecasting lines. The next bar, it broke through the bottom of those lines and turned around. The next bar, which is expired on September the 8th, it went up and closed right on it. And where we're trading now, we're running along it. So this bar, this particular line of the fourth seal forecasting, has held this market now for 3.5 months. It's pretty extraordinary. And what we have now, what Frank's been talking about with the death cycle, is this 59 cycle expiring here. Now, we've started the count from this bar here, which is the bar ending February the 25th, and that's the closing low of the rundown from the 2009 crash low. You can start these counts either from the closing low or from the chart low, which would be the next period. and that's why this stuff is valid plus or minus one period. Now this is virtually a monthly chart, so these time frames are getting quite big, but this one we have now where we're in, we do have a 59 cycle on it. Now it's actually not quite a crash low. A crash low, a crash cycle would run from high to low, from high to high, and we call it on the first hop. And that means that, let me get an arrow to show you, this was the start of the count, and it must come at 59 from the start of the count. But this particular count is coming from a low, so it's not quite as powerful as the traditional crash cycle. But you'll see if we switch back now to the 12-day chart, we've got the same thing with this market being held by these fourth degree lines. I think I said earlier that the market was going to go to 2100 by the end of the year, which is just up here somewhere, and it may, but I'd certainly be on alert for sell signals now. The market is essentially, equities are getting themselves disorganized. You've got the Dow making fresh highs, you've got the Nasdaq very strong, you've got the Russell lagging, and normally these markets work together and in conjunction with each other, and that's not happening now, and that's a sign that these markets are disorganized. So just before we go to Daryl, if he's still there and we can get him, let me show you one other chart here that was of interest. And this is a chart of copper, and we had a buy signal on this bar here, which is September the 16th. Very big bar. We got into it a bit late because this green line, you can see I've talked about it recently, is a gap. So the true high of that bar is actually the close of the previous bar, which is there at 310 or so. But that's an inside bar, so we could have either entered there or we could have entered at the high of the last bar that was not itself an inside bar, which would take you back to the previous bar, which had a high of 311.70, and we got this massive roar up here. It was a valid signal, it was a plus buy signal, and you may have been tempted to hold on to that signal and let it run. When you get these really, really extraordinarily big bars, more often than not, the market requires some time to consolidate. And the point I want to make here, those of you who subscribe to copper in the fourth seal program would have seen that the trend in the fourth seal in copper is down. So this big buy signal here was against the trend, and that was a pretty good reason to exit the market on close. Okay, so that's most of what I had to talk to you about. I've got, seems to be working okay, Daryl. We've got a ton of questions today, guys. There's H.D. Stevens. That Chuck, is it now? I can't remember his nickname. Chip. It's Chip, yes. Hello, mate. Okay, lots of people here, and lots of people, and my friend Neil is making some comments. Thanks, mate, for your help there. Yes, we think we've got that covered, guys, and we're going to try and go back to Daryl now. So, Daryl, I'm going to try and make you the presenter, and I hope that you are at your right computer. Let's first of all see if you can hear me. Daryl, can you hear me?
John, I can hear you. Can you hear me?
I can. So I'm going to make you the presenter now, and I hope that you're going to be able to throw it back to me when you finish your presentation, because it really pretty much played havoc with things. So you're now the presenter, Daryl. Let's see what you've got there. Yeah, see if we can see your screen.
Right, John, can you see my screen?
Yes, now we can. Thank you.
Right.
So, Daryl, you're going to bring us up to date on these Fractal trading and
There we go. Yeah, John, I'm not sure, I don't know what happened earlier.
Ask Glennis to mute a microphone, would you please? We can't have both two people talking. It screws up the audio. Yeah, go ahead, mate. It's using those strange computers that you guys like.
Oh no, we were actually on my regular computer that I always use on these webinars, and for some reason it wasn't handing the control over to us. I couldn't accept it. Anyway, and then when the recording thing came up, suddenly I think everything came right from there. So there was some little technical hitch with GoToMeeting, I think.
Yes, could well have been, Daryl. They were having they couldn't identify what the problem was, that we couldn't start the recording the right time. I should just say briefly, folks, those of you who are not aware of who Daryl is, he's a great mate of mine. He's been involved in the Danielcode for many years. He's done many tutorials. He's a champion racing car driver and a man of many parts, director of many companies, and a great bloke, great company. Always love spending time with Daryl and Sage. And they have been keeping the results on Fractal for us since we started at the beginning of the year. And Daryl's much more familiar with the detail of it than I am, so Daryl's going to bring you up to date on what's been happening with the Fractal trading. So over to you, Daryl. Keep going.
Okay, thanks for that, John. Yeah, unfortunately, the results through August pretty much carried on from that terrible month that we had through July, when the markets just lost their momentum. And the screen that I've got up now is the Fractal futures. You can see there market by market, and unfortunately, as I said, a loss there for August of $8,465. Now, the one change that has occurred from August forward is that all of our results are now incorporating full brokerage. The reports that we're getting off the auto trade system have basically got that built into every trade. So all the results are now coming off a live broker account. We ran for a month. We ran those alongside our manual recording before we reverted it completely across to the results that were coming off the live broker account. Okay, we'll just move on to the next one. As you can see, our August result for Forex was a fairly terrible result as well, at minus $10,238. Once again, just to carry on, Forex still managed, despite the very bad market in July, Forex did still manage to make that small profit in July, but reverted to quite a significant loss in August. Right, moving forward. For September, for futures, I've done just brought the summary for the first 3 weeks of September. It was not quite three full weeks, but the figures that you're seeing there are actually right up to date till market close, our morning here New Zealand time, but obviously evening US time. And the interesting thing about this result is that you can see the 3 weeks to date, negative $11,737. However, in past webinars we've talked about this equalising the margin, and essentially that's taking every contract value up to the highest value contract or margin contract, which is the DAX. And by doing that equalised margin exercise, in other words, putting every single market or every single contract on an apples for apples basis, it actually produces a profit for the month of $37,724. So once again, that's just quite an interesting observation in terms of what that what that exercise does when you bring the contracts up to be really like for like. September Forex, once again, we've really noticed in the last couple of weeks that the market seems to be getting a bit of momentum back into it, and there's been a number of indicators of that, just in terms of the way that we're getting some longer runs and the signals that we're getting. We still are getting a number of markets where we're just getting this constant whipsawing, which is doing some damage to us, but it is noticeable, and we just hope that continues, and as we move forward that we get to see some of the momentum in the market that we were enjoying earlier in the year when Fractal was performing so well. So this result for this last week, $6,131 profit. It's actually a carryover from many trades that actually started last week, and we actually ended last week with quite a few open trades. And sorry, this thing keeps flashing on my screen for some reason. And that momentum from last week, when we finished the week, as I say, with, even though it was a loss for last week, we did finish with a number of open positions that were quite in profit. I just wanted to show you this little ouch here. This was the pound USD, and John actually showed this slide in terms of actually managing this trade in terms of tradecraft at the last webinar. But in terms of this was a trade that we got into on this KRB low here on the 5th of September. It was a Friday, and there was some upward momentum that got us into the buy on Fractal, and then we were in the buy over the weekend, and the market gapped over the weekend, gapped down. So we opened the market. We opened in the buy position down on this open here on the Monday morning. Now, whereas we had a stop in the market with Fractal of it was running on a 50-tick stop, we actually got stopped out at about 160 ticks. So instead of a loss in the vicinity of somewhere around that $50 mark, it ended up as a loss of around about the $1,600 mark. Gapping is not something that you often see to that extent in the Forex markets. You see it a lot in the futures markets, but not to that extent. I haven't seen a gapping. I can't remember when I last saw a gap like this in the Forex markets. What did it over that weekend was the real swing of momentum in the Scottish independence vote, and there was a real swing from the no's to the yeses over that weekend, and it had a significant impact on the pound, and that impacted that Fractal result quite considerably. So I just bring this up merely to show you that this is just one of the risks of real life trading. There are some things that are outside of your control. I know that John has frequently said in webinars that and tutorials that people need to make a choice around whether or not they want to be in trades, stay in their trades over a weekend, or whether they want to close out on a Friday night and minimise their risk. And this is just an example of where what can happen on very infrequent occasions when you have open trades running over a weekend.
Can I have a bit more volatility in those GBP markets too, Darryl? The early returns on the Scottish independence vote. No is ahead at 57.7. Yes, which is yes for independence. No, we don't want independence. We want to stay in the Union. Is at 42%. So only a few areas decided so far. Clackmannshire and Orkney. Lovely place, Orkney. It's remote, wild, windswept. I spent a few nights there, days and nights. on a cruising trip. I had one of my yachts up there. It was marvellous. I liked it. Everyone else says it's bloody cold and awful, but it was great fun. Anyway, I digress, other than to say there'll be a bit more drama on the GBP for a while. Back to you, Daryl.
Thanks, John. Now, I didn't want to finish showing you those Frac results and that little ouch movement. I didn't want to finish on a negative. I just want to show you, really this is picking up on what John is doing with Frac Pro, and I'll just show you a succession of screens with our open positions report off our live broker account for Frac. Now, as John has already said to you earlier in the webinar, he's with the work that he's been doing, which has been immense. Frac will be able to change the speeds of market by market, and by monitoring that on a month-to-month basis, we'll also be able to swap out markets very readily between the performing markets and the non-performing markets. The other thing that I'm not sure whether John mentioned or not, I was trying to fix our technical issues, was the fact that Frac Pro, the platform that it'll be running on, will be able to it'll be able to move stops to break even. It'll then be able to run trailing stops in the market. And with the current Frac program that we're running and the auto trade program that we're running it on, this is something that we're currently missing. And I'll just give you that bit of background because it really strongly relates to these few charts that I'm going to show you, because just over the last couple of weeks, all these reports are our open position reports that I basically download one of these every morning New Zealand time, which is around about market close time in New York. And we see this just constantly, where we have an all-green sheet, or nearly all-green sheet, yet we have vast numbers of trades that close out in significant area or small to significant area of loss. And it's because we've got good momentum into a trade, we've generated the signal into a trade, and then we just lose that momentum, and then the market just drifts back, and gets itself into a loss position before it generates the momentum to generate the reversal signal. And since July, we've just been frustrated by seeing this just happening constantly, week in, week out. But if we had a better ability to actually manage the trades, which Frac Pro will, the anticipation is that we're going to dramatically improve the performance, because as you can see, we constantly see these open position reports every day that look like this. Here's the next one from last Thursday. Not a single not a single open position at loss on that day. Here's another one the next day. We had one small loss there in oil on last Friday. Here's Tuesday of this week. We had three small losses there, and then we had one in silver at $325. But once again, the profits in the open positions far outweighing the losses. And this is yesterday's sheet. And so once again, there's only one trade and loss on that sheet, $13 on the E-mini. So basically, really what I'm just wanting to, I guess, show you there is that I know that some people are like through this current difficult trading period, we've been really emphasising the need to actually provide a bit of oversight and a bit of management into the trades. And the reason for just showing those daily open position reports is the fact that we're getting this big disparity between what we're seeing, the potential of the trades versus where many of them actually finally finish up. So John, that's pretty much it in terms of the results.
Thank you, Daryl. That's a great presentation. I like the trend. It's looking much better. And folks, think about how you can manage your trades a bit. Set yourself a bit of a target. I suggest is make sure it's a function of a fixed number. Otherwise, you'll be back to grasping, clutching at profits and being terrified by a pullback. Set yourself a mathematical target based on the stop loss. You might say half the stop loss, or equal the stop loss, or twice the stop loss, whatever you like. It's up to you. And think about when markets get to that target, either moving your stop to break even, or putting on a trailing stop if your platform has the ability to do that. Take the existing fixed stop and convert it to a trailing stop. We've been testing that process on the Pro, Fractal Pro. It seems to work very well. Or you can even say, I'm going to take half the fixed stop that was given to me when the signal came through and convert that to a trailing stop. And that works better. So think about introducing some little bit of management oversight there where you can and where it's convenient. You don't have to sit there looking at screens all the time. If you look at the screen every 2 to 4 hours, make that adjustment. I think you'll find if you can lock in some of those good profits that we're getting now, that'll be very nice. So Darren, if you could throw that, thank you for your presentation, mate. First class as always. If you can throw that back to me as presenter, I will get on. We've actually run an hour already, and I will get on and answer the questions that we've got outstanding. So could you make me presenter, please?
John, it says it's in your control. Hang on, I'll just try and... Does that work, John?
I have now. Whatever you did worked. Thank you, Daryl.
Right, good. I'll just unmute my microphone.
Okay. All right, thanks very much, folks. Welcome back to my screen. Let's just make sure that you're seeing my screen, which doesn't have anything on at the moment. And we've got a lot of questions, so let me run through them. I've got quite a few here that have come in while we've been doing the show today, which is great. I love your questions, and I'm going to answer all of them. But let me start, if I may, by going through the questions that came in during the week. And these are from Lois, Rodney, Ray, Ian, Dave, Brian, Alan, John, and another one from Ian and Justin. So if any of those are your names, you're about to get your questions answered. Let's start, first of all, Lois, with you. I had a most peculiar conversation with the lass from PFG about this Forex payout settlement. Apparently there was a supplementary court order that changed that instead of having a date at which you had to have your claim in, it said a number of claims that would be accepted, and they then closed it. I haven't seen the court documents. I can't find them on the website, and the lady I was talking to was unable to give them to me. That was her version of it. So it seems that they have not run to the time they said, but the court ordered that when a certain number of claims were received, they arbitrarily, or I shouldn't say that, pursuant to the court order, closed the book on that. So we'll try and find out some more, but that's as much as I've been able to find out today. Interesting for any of you people still with claims against PFG, there's been a bit of talk about the court case. The trustee, who seems to be a pretty tough old bird, he's certainly very good at getting himself in, and I think their fees are up in the $30–40 million range now. They're suing, of course, the main banks of PFG, alleging negligence and constructive fraud. I'm an attorney, as many of you know, a very old attorney now. I've seen a lot of this stuff, and I haven't seen any of the pleadings or the papers, so I'm just telling you as much as I know from reading what's been available on the PFG website. But it's very hard for me to believe that this whole thing could have happened without involvement by the bank. The whole PFG saga was briefly that the statements of account were being sent to a private mailbox that the owner had access to and none of his staff. So how a certified accountant signed off on accounts, how his own accounting staff signed off on accounts without seeing the original bank statements and ensuring that they came from the bank is just about beyond me. So my guess is that the odds of this claim against the banks is very strong, and I don't be surprised if they finish up getting pretty much all of the money back. Anyway, let's hope so. Rodney, I mentioned you last week. Rodney did a trial of our Genie, our auto trade Genie, and made $17,000 in 2 weeks. So he's very thrilled with that, so he should be. What I want to say, Rodney, in regard to that and also in regard to Daryl's comments, is markets get their averages. They don't. Markets are skewed systemically. They don't just run along quietly, giving you the average every week or every month. They get their average by overshooting very high and very low, which is why we have periods of drawdowns. And when markets are doing well and making tons of money, we usually don't hear from anyone. As soon as they start losing money, then the emails start coming in. But Rodney made $17,000 in just 2 weeks, which is absolutely fabulous trading. Doesn't surprise me. I've seen our Genie Auto Trade make that money and more before. But the average is 7.5 to 8.5% per month, Rodney. So over time, you'll have less thrilling results than that, and some downright depressing. And that's how markets set their averages. They overshoot and then they undershoot. Okay, let's see the next question here. This was from Ray. Ray, you wanted to know about the time cycle on the 24-day chart, and I was unable to give it to you. I didn't have that chart. I've actually shown it to you a little bit earlier today. This is it now. Let me make sure you're seeing the screen. Yes, you are. This is our 24-day chart. Here's the March 2009 low. This is it running along here, and as I pointed out to you, it's been locked onto this fourth seal line now for 3.5 months. We do have a 59 cycle right now that expires October the 10th. As I said, that is accurate to plus or minus 1 period, because we've started the count here from the period ending February 25th, which is the closing low. It's equally valid to start the count from the chart low, which is the period ending March the 31st. So we have that 59 cycle now, which expires October the 10th, and the next period will be November the 13th. Okay, so that's Ray. Any of you people, if I don't answer your questions fully and correctly, please write to me. Email me, Jane Needham, at, why are we showing up here? We need a box, do we? Here we are. Let's see what we can do here. Don't need that one. Need this one. Okay. J. Needham at the Danielcode.com. And we'll make that a bit bigger so you can see it. I'll leave that there. We have gremlins in here as well. J. Needham at the Danielcode.com. Why doesn't it like that? I don't know. Let's see if I can drag this out of the way. Drag this out of the way. I can't do anything. I've got to say, okay. Now I can. This thing shouts at you if you're not doing correctly. There you are. It's on the screen, folks. J. Needham at the Danielcode.com. Many of these questions, if you don't feel that they've been answered fully to your satisfaction, do please drop me an email. and I'll answer them usually at the next webinar that I do. That was Ray. Ian, this is you. Let me just make some space for this. TO3 are reversal signals, so a blue line. Do the blue line signals come under the $85 subscription package? No, the blue line signals, Ian, are part of the plus package. Do any of the TO3 signals have to be set up to take the stop and reverse signal that you say must adhere to? All signals, excuse me, all signals that in the Danielcode, if you get a outside bar on the day of entry, you must take the stop and reverse. And let me see if I can show you an example of that that's a bit more complex than most. I'm really looking for an outside bar that follows an inside bar. Be pot luck if we can find one. Let's have a look. I'm just randomly flicking here. See if I can find you an outside bar. Oh, here's this Aussie the SPY, the share price index trade we talked about last week. It's just gone on long past, and we've had contract rollover. But don't forget, you don't have to roll over your contract on the day of rollover. Markets usually trade for a couple of weeks after that rollover. It's just that once you've had rollover, you can't create a new trade. So that Aussie SPY trade's now worth about $5,500, less this losing trade in there. No, I can't find one at random, Ian, but I'll make sure I've got one for you at the next webinar. And what I wanted to show you was you always, when you get an outside bar on the day of entry of any signal, you must take the stop reverse. But I want to show you the particular way to trade an outside bar that comes immediately after an inside bar. Okay, Dave, this is Dave O'Brien. Dave, let me see. Oh, Dave. Okay. Dave stayed up until 2 a.m. in the UK. His question is, can you trade options on the reversal signals? Yes, you can, mate. You can use the Danielcode signals to trade your options. You can use the fourth seal for much longer time periods. That runs basically off the 6-day charts and the 12-day charts, where 6 trading days equals 1 bar, or 12 trading days equals 1 bar. Or if you're trading much shorter term options, you can trade straight off the TO3 and plus signals. Why don't you, Dave, set yourself up with a free trial of what we've got and see how it works for you? The answer is, I can tell you how good I think this stuff is, but that may or may not suit your trading style. And if it does, that'll be great. If not, no harm done. So I suggest you do that. Dave, thanks for staying up so late to listen to me. I hope you're still up this morning over there. You've got lots of excitement with the referendum going on as well. This is Brian on the T3 plus signals. Excuse me, is the 7% a month return based on the first target, FBC, or running eventually stopped out on a trailing stop? Brian, that works off those. It's about 7.4 to 7.6% monthly average, sometimes as much as 8.25, 8.5 per month, and that's based. Those figures are based off the Genie auto trade, which runs exactly how the signal is. If it's a C signal, it will run until it's stopped out by moving the stop loss with the fast stochastic. If it's a daily signal, it will exit first profitable close as it's supposed to. So Genie knows. It's called Genie because it's pretty clever. I think so. I invented it. And it knows exactly how the Danielcode signals are supposed to work, and it just goes ahead and executes all of those, including the stop and reverse where that's appropriate. This is Alan trying to figure out how the fourth seal will tell you where the markets are going. Showed you the heading. The S&P said it was heading for 2100. show me on the chart how you know this, because there are a few foreseal lines. That 2100, Alan, actually comes from the trading channel, and it just if you have a time, I can tell you where the median of the trading channel will be, and if the trend doesn't change, that's where the market will be. So you've seen a few of those charts today. Let's have a look. This is John. Hi, John. Some clarification. Are all the TO3 signals good for 2 days, or are they only applicable on the second day when there is an inside bar on the first day? If they are all good for a second day, is the entry point the extreme value of the setup bar or the first day after the setup? John, let me show you. TO3 signals are valid for 2 days, including the day of posting. Now you should be able to see me, my chart, the screen's out the website, and what you do is go and click on this link here, which says trade program. This is most important, and here is our trade program for today, and underneath here, incidentally, folks, are the rules. This is a R, how to trade it. This is a C, how to trade it. This is a 3, how to trade it. So they're underneath this tab called Trade Program. And what you do is you just type in here your account balance, whatever it is, and your risk. In this case, I don't recommend using much more than 2% unless you're very good at this stuff. Click that button and you'll see all of the trades come up. And these include the days, John, if the signal has not been elected, this program will carry it forward. So essentially all you need to do is look at this program every day after I posted the signals, and once I posted them, these boxes up the top come up as gold. That means there are new signals in there with the day's date. Once you've got that open, you can go in here, you can type in how many contracts you want to take, and this has already been calculated to be within the percent risk that you put in, and it's also telling you which markets are correlated and which aren't, and the program knows that and it's adjusting for that. So you can go along through here, you can put in all of your number of contracts you want to take and any markets, and then tell it to calculate the total value sold, and it will do a quick spin around and come back, and in this column you can see that if you took that trade, your risk on entry is $84. If you took the trade in the Euro GBP, your risk on entry is $243. If you took one contract in the soybeans trade today, your risk on entry would be $837. And if they were all elected, which is very unlikely because these things, a little bit less than 50% of them are elected normally, your total risk would be $1,164. So that's all there. Please explain again your strategy for reversing a trade gone bad if it happens on an outside bar. Well, if you have a buy signal and you get, let me just pull up a chart for you, John. Sorry to go so late, folks. Here's an example. If this was a buy, and it wasn't, this was the buy the day before, but if this bar had been a buy, the minute it went down below the true low, which is the close of the previous bar, the trade had failed and you had to be short. And you said probably a few rude words about me on that day, but 2-3 days later, you got your money back. I'll go through that in the next Tradecraft webinar, John, because I've got a lot more to tell you about Tradecraft and the point at which trade signals actually fail. This is Ian. Thanks for answering my question. Need some clarification. I've got that question from you and another one from Alan and another one from Brian. Guys, I'll have to ask you to wait till next week. I'm sorry, we've gone 20 minutes past our allocated time, and I can't go on with that much longer because people have commitments and have to go elsewhere. So I haven't forgotten you. I'll keep those ones marked, and I'll either get you an email reply, those of you that have asked questions, or I will deal with it in the webinar next week. So thank you very much for your attendance here, folks. Let me see if there's any pressing matters I have to deal with here. Really have run out of time, for which I apologise. In fact, I'll blame Sage for her Mac computer. Okay, here we are. Shift. What are we doing, mate? 30 beers and a few magic mushrooms tonight. Be trading sunflower. That's about right. The Alibaba Zen P. Yes, it's going to be huge, this Alibaba thing. It's very interesting indeed. Who else we got? Craig. Yeah, hi mate. This is Craig Ayres. Was up here having a holiday, and I had a bout of malaria. I couldn't get together with him to have a drink. I'm sorry I missed you there, Craig. Where to trade gold Huey? Huey is an index of the unhedged gold miners. It's an index of 25 gold miners that don't hedge their forward trade. As such, it's a proxy for gold. And Craig, you can actually trade options on Huey. You can't trade futures, but we use it as a proxy for gold. If you have a signal on Huey, it's so highly correlated with gold and silver that you can take the trade in COMEX gold, our normal gold futures contract, or in silver if you wish, if those trades are elected. Let's see what else we've got here. Ben, hello mate, here's the fruit. Okay, John's left. He had a question. We'll have to deal with him another time. Okay, Neil, thanks for being here. Matt, good to have you here. Brian, I'm glad you're here, mate. You have missed a few of these, but I will answer that outstanding question. And Nigel, yeah, thanks for keeping us up to date with that. So that's about it, folks. We're well and truly overdue, and it's actually Friday, heading for midday at the Down Under, but I'm on the weekend leave shortly, and heading for the swimming pool or the surf, and a few cold Bloody Marys. So thank you very much for being with us. I really appreciate your attendance. I do apologise for going over time, and I'll look forward to seeing you next week. Bye-bye.